The number one issue traders have within their entry model when it comes to strategy is the fact that they're inconsistent and they guess and try to predict where the market is going rather actually having steps to enter a trade. So if you find yourself always guessing and trying to predict the next move instead of actually getting a real confirmation, then you want to watch this video and stay to the end because I have something exciting for you all. But anyways, let's get into it. The thing is, the recent trend that I've seen going on is so many people are trying to catch tops, bottoms, reversals, and they forget that trading is a reaction game. It's not prediction. You have to react to your setup, not your feelings. So I trade solely based on structure, and I have a very specific entry model that gives me confirmation, timing, and I use my confluences to properly enter trades so that I'm not just guessing or trying to predict the market. Don't get too caught up with other traders trying to tell you you can catch a top or a bottom. That's not exactly how it works, but my entry model gives me something pretty close to that, except I'm not actually predicting, I'm reacting to what the market is doing. So let's get right on into it. So my entry model consists of three different types of entries. There's a break, bounce. So my entry model consists of three different types of entries. There's a break, bounce, and a reject. Now you may be seeing these lines up here, and what they represent is this upper line is going to be our resistance level, and this lower line is going to be our support. Now, same goes for this. So we have the break, the bounce, and the reject. Those are my three different types of entries. Those are the three ways the market reacts to price. Now, I'm going to draw it out for you guys, and then we're going to get into a live backtesting where I actually show you guys how I take my levels and how I make sure they're strong levels that I could trade from and they're not just random. So let's get into the three entry models first. So for the break entry model, you can kind of guess where I'm going with this one. What I'm looking for is a clear break on our support or our resistance level. So let's say price is trading in between these two levels. Now, what I'm going to look for is for price to trade up into resistance and break above there. Now, when price does break above, we want to make sure it's actually confirmed and it's not just a false breakout. So what we want to look for is a 5-minute displacement candle above our level. And what that means is a bullish candle going in this direction that shows strong conviction that buyers are present. And I will also show you guys in live backtesting my other confluences for entry. So what we're looking for is that break. And then we could get that retest to back to our level and then a continuation higher. So this is the first type of entry that I'm looking for. Now, the second one that consists of the break as well is going to be, the second one is going to be very similar, except what I'm looking for is a break on our support level. So what I'm looking to see here is for price to be trading in between these two levels and come down to our support and break below support. And what we want to see is the same thing. We don't want to see a false breakout below support. So we want to get that 5-minute displacement candle, a potential retest into our level, and then a continuation down. So that is the first entry model that I'm going to be looking for. Now, for our second entry model, which is the bounce, what I'm looking for is going to be a bounce on our support level. So here we have our two levels. What I want to see is price trading in between these, come down to our first level, and instead of breaking it, I want to see a clear bounce. So I'm going to see the same thing. I want to see a bullish displacement candle because I'm looking for upside on this bounce. I'm looking for price to trade into our support level and actually get that bounce off of there. So I'm going to watch for a 5-minute bullish displacement candle showing that buyers are very present, and I want to see a continuation upwards into our resistance level. So that is going to be our next setup. And for the last setup is going to be a reject. Now, reject is similar to a bounce, just the opposite. So what I want to see is for price to be trading in between these two levels, price to trade up into our resistance level. And instead of breaking it, I want to see a clear reject and a 5-minute bearish displacement candle rejecting this level. We might see a wick out of here and then a continuation downwards into our support. So these are going to be our three different types of entry models. Now let me take you through a live back testing where I actually show you how this works. So what we have right here is QQQ, and I've taken us back pre-market so I can show you exactly how I would actually mark out my levels. So what I want to look for are multiple candle taps holding above a level for support, or multiple candle taps rejecting a level for resistance. Now, in this case and scenario, this is actually QQQ's all-time high. So we're going to be going based off that. That is going to be our first resistance level, is that all-time high. So let's make that a clear mark up here where we've seen multiple candle taps into this area and rejecting it at 602.65. So that's going to be our first resistance level. Now, for our second resistance level, where we've seen price actually reject and we've seen it in this current pre-market, is at 612. So that's going to be my next resistance level. Now, for support, and I also want to mention you have to be taking these out in the 1 hour time frame. Now, for our support levels, I'm going to be marking out this level right here, which we've also seen multiple candle taps into, holding this up multiple different times, and I'm going to color this one a different color just so that we don't get it confused. So let's color this one a light blue. Very nice. Now I'm going to mark out another support level just so we can have even more confirmation. So normally I'll go ahead and mark out 2 support levels and 2 resistance levels so that I have a nice range to base it off of. So now that we have our levels marked out, the next thing that I also mark out are going to be supply and demand zones. Now for supply and demand zones, you actually want to go into the 30-minute time frame. So we're going to change up that time frame there, and we're going to be using the 30-minute time frame. Now, a supply zone is going to be near a resistance level. It's going to be that same level that price does not want to break above. For a demand zone, it's going to be near a support level, that zone that price does not want to break below. And these areas have been tested multiple times. So for our obvious supply zone, we have one right up here where price has not broken above, right from 602 to that 603 area. Now for our demand zone, we have one down here, which I'm going to recolor. Color that the same sort of color. That is going to be our demand zone from around 596 to that 597 range. We could mark out another demand zone as well, a little bit closer to where price is at, closer to this area right here, because we've obviously seen price reject. We've gotten a massive wick in there, and price has not wanted to break below it during this pre-market area. So those are the areas I'm going to be marking out. Now what I'm going to do is turn on volume. So this is the volume, visible range volume profile indicator on TradingView. You can just find it if you search up visible range volume profile, and you want to use the one that's by TradingView. Now what this gives us is right here we see the volume high area. That means where volume was the highest in the time that I'm looking. So volume changes where you move your chart up and down. So if I were to go back here, the volume would, change, and it would show me that this was the volume high area. That's what's good about using volume, visible range volume profile, because it changes with where you are in relation to the chart. Now, I'm going to skip ahead a little bit and take us closer to market open so we could start that back testing session. Now that we are near market open, I'm going to switch us into the 5-minute time frame, just so that is where I would take my entries off of, is in the 5-minute time frame. So now we have all of our levels marked out. It's clear. We could see exactly where we would want to trade from. We would either want to take a reject off this level, a break of our demand zone right here and come down to our next support level, or a break above this resistance level right here to trade up into our next resistance level and that supply zone up there. So what I'm going to be looking for are those 3 types of setups. the break, bounce, reject. Now, I don't know what type of setup this day is going to give me. I honestly picked a random day and just started going along. So let's start to press play and get closer to market open. So during market open, we could already see price falling into this demand zone, and now we see price holding it up. So since price is already trading into or near this demand zone, I might be looking for price to either hold it up once the market opens, get a nice bounce, or break right through it. So let's continue and let's see what price decides to do. We're 10 minutes away from market open, and now we obviously get a huge bearish displacement candle below this demand zone. Am I going to panic enter? No. Obviously, price is being a little bit crazy right now, and I'm not just going to take a FOMO entry right there. I'm going to wait for the next candle to see if price actually continues with downside, or if we end up trading back into this demand zone. So let's see what happens next. So we get another bearish candle, and something interesting to point out is we have more sellers, so my pink are sellers, than buyers right at this area that we're trading into. Now at this area, we actually have more buyers than sellers. So what is going to give me proper conviction? Looking at more volume. We still have more sellers up here, up here, up here, up here, and we have more sellers. So overall, looking at volume, there are more sellers. So since volume is obviously showing us the market does want downside, and we've got these first displacement candles, and we've also seen the fact that we've broken through this first demand zone, this gives me enough confluence and confirmation for entry. So we have two 5-minute displacement candles, we have volume showing us the way, and we are below that demand zone, and we also rejected our resistance level pre-market. So I'm going to take my entry here. I'm going to go sell. And obviously I trade options, but I can only replay shares. So that's what we're going to be doing. And where would I put my stop loss? I'm going to put my stop loss up above this demand zone. Now for my take profit, ideally I would want to be taking out some of my contracts right here at this next support level. So unfortunately with replay mode, I can't just take partials. So what I'm going to do is put my exit at this next support area, and hopefully that hits it. So we're going to confirm that there. And what would be our risk to reward ratio? So if our stop is up here and our reward is all the way down here, that gives us about a 1 to almost 3 risk to reward ratio. Now let's play this out and see how it goes. So we see a lot of sellers coming in. Price starts to hold up this area right here. This is exactly where I would take my partials and properly exit the position. But since, again, I'm backtesting, I'm not exactly able to do that. So let's see where price wants to go and trade into. So we do get that break, and we do like we're coming down to my support level, that next support level that we had marked out. And we initially smack take profit, and that's how the trade would work out. Do we continue running below there? Yeah, but this was a great trade, a 1 to 3 risk to reward ratio, meaning if I'm risking $100, then I will be making is a perfect example of the break setup. That is what exactly we are trading. So yeah. Anyways, thank you guys so much for watching. Hope you learned a ton. Thank you guys so much for watching. Hope you enjoyed that video. Anyways, if you guys want a more in-depth explanation to my strategy itself, make sure to check out this video linked right here, and make sure to subscribe for more free educational videos. See you guys all next time.